the last few minutes, we got a court filing which FTX is trading new CEO John Ray, saying he, quote, never in his career has seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. Ray says that Sam Bankman-Fried is in the Bahamas, continues to make erratic and misleading public statements. Fallout from the FTX collapse has once again raised the prospect of tighter cryptocurrency regulation from Washington. Talk more about that. I want to welcome North Carolina Republican Congressman Patrick McHenry, ranking member of the House Financial Services Committee. He just announced a crypto hearing for next month. And by the way, the gentleman we were just quoting, Congressman, worked on the Enron bankruptcy. So, you know, puts all this a little bit in perspective or context and just how bad it may very well be. Do you believe ultimately
this is the Enron moment for this nascent industry, and this is the reason why you have a bipartisan call for hearings, and that's the reason why the outgoing chair of the House Financial Services Committee and the incoming chair, it's Maxine Waters and I, have called for a hearing, and we're going to have a hearing in December. This is the first bipartisan hearing I've seen under the Democrat Congress in the last 4 years in our committee. This is noteworthy because it is the entry point for our longer-term conversations around how you put up consumer protections and a regulatory framework for a really important new set of technology.
So, Congressman, here's the real question, though, and which is, I mean, straight up, could have this been avoided? If in truth this was a fraud, a massive fraud, a Ponzi scheme, a combination of mismarking assets purposely, of potentially stealing assets, of commingling assets and the like, do you believe that regulation, and by the way, in another country, do you believe that regulation here could have prevented it?
For U.S. consumers, yes. We've had a complete failure by the regulators. We do not have clarity from the CFTC or the SEC. We don't have clarity from banking regulators. So banks can't even hold these assets as a custodian for their customers. And moreover, not only do we have a lack of clarity, we have this Securities and Exchange Commission chair made a decision that that custody of digital assets cannot occur. So Coinbase is holding those assets on its books. FTX U.S. is holding it on its books, which is a disaster for customers.
But here's the question. If you have concerns that the underlying assets themselves are part of effectively a massive corruption, and I don't know if they are or they aren't, but that the assets themselves are being manipulated, and I think if you look into this example, you can see how they may have been manipulated. There's a question whether you want U.S. firms to be the custodian of assets that unto themselves may be questionable. No?
Well, first, there are an enormous number of coins that have legitimate use cases and have serious trading volume and liquidity behind it, and others that do not. There's quite a level gradient here in the digital asset space. Some are securities masking as others. Some are commodities masking as something else. Some are truly unique sets of technology, and others are complete frauds, as we found out with this FTX case. But the fact that we don't have a framework, both through regulation and law, for digital assets in the United States, if we have an exchange in the United States that's using money transmission licenses because they can't otherwise get regulatory clarity, that's not good for consumers. So it's the role of our regulators, and since they have failed, now Congress, to determine what is a digital asset, a means of exchange, and bring clarity to this space so we can bring legitimate money alongside of this and consumer protection alongside of this.